Thanks everyone for joining us for this session of Mango Spaces. One of the things that's usually fun about doing these spaces is that it gives us the opportunity to engage with CEOs, with C-level executives across the companies that we interact with, that we deal with, that in more ways than one that we actually put our hands in. And that really applies, especially when you're talking about the insurance business. We've got George Correa, who's the CEO of Sanlam-Allianz General Insurance here in Kenya. For most of us, I'm sure that's going to be a bit of a new combination, a new set of names that we've got to get used to. He's here to explain why exactly this happened. What does it mean for you as an individual, as a business, as a corporate who has business with this new entity? Let's start with the broad idea. Walk us through the combination here. You've got Sanlam coming together with Allianz. How did this transaction come about?
Sanlam, the largest insurance organization in Africa, operating in 26 countries. Allianz is the largest insurance brand in the world. So the idea was these two big brands coming together to help us push the insurance dial, grow the numbers. We've struggled a lot with deepening insurance in our country and in the continent. So it's really for these two coming together with their individual strengths to then see how can we help improve the protection gap that exists in our continent.
When we say that it made sense to combine with these two entities that have different strengths, walk us through what those differentiated strengths were from Sanlam's side and Allianz's side.
For Sanlam, it's understanding Africa, having been in the continent for plus 100 years. And so we know the people, we know the cultures. We've got the experience around different markets. We know the regulators, and it's already a large business. So to that extent, understanding the continent. Allianz operating around the world, they bring other capabilities like technology, which is a big push, or one of the things that we want to bring and utilize a lot more. The whole customer experience, delivery of product, digitization, and products, including offering reinsurance capacity to ensure them that we're able to handle even larger risks.
So for some of the clients who might be listening to this, what is changing in their experience and what is remaining the same?
What we want to do is really to keep improving on what we're doing, number one, for our clients especially. So we're working very hard because we've got gaps in our offerings, whether it's product, whether it's service. There's a lot of work that we're going to engage in as part of this new entity to ensure then that whoever is with us, then the service is improving, getting better. I'm looking for new ways of new touch points, whether it's enabling them to reach us through digital channels, but really ensuring that the experience with us is good. So that's the number one thing that you're working at around. And then starting to think about new products that you're not offering, making them simpler, easier to distribute to larger populations, but also then looking at the larger risks, big industries. How can we improve what you're offering them? Can we price it better? Can we price it in different ways? And then a big push for the SMEs, which is one of the things we want to grow, because we've seen in the last few years, especially when you look at political issues, a lot of them get exposed and their survival is usually built around a single person and probably a single shop or outlet. So again, how can we offer them protection so that in the event of any loss, whether it's natural, it's political, enabling them to continue doing their business. So that's really what you're looking at in this new setup.
There's a phrase that you use there that I know in insurance circles is something that people understand quite instinctively, the protection gap. Can you break that down for those of us who may not be in the insurance sector who understand how the business works? When we say the protection gap exists and it's a certain dollar amount, what exactly are you referring to?
So the idea is that if you look at the total risks that exist and the amount that is actually covered by insurance, then there's a huge gap between those two. So that in the event of a catastrophe or an event that could be insured, then the person or business are exposed to that extent. That's really what the protection gap is. So what you want to do is then to educate people, to provide products that then ensure that between what could go wrong and what you have insurance for, what you don't have, then that is fully covered. So one you could think about at a very basic level, and just as an illustration, if you had a car and you only had, say, third-party insurance that covered you against third-party risks, you could then get comprehensive insurance that then ensures even the vehicle itself is covered, and therefore the gap between, in the event of, let's say, an accident, a theft, is covered. Yourself, you've got no insurance. If you're injured, then you'd be exposed. Then by personal accident insurance, again, to close the gap. That's the broad idea around protection gap.
When you speak about using the combined strength of the tech assets and the tech know-how that Allianz brings to the table, and the industry knowledge, the market knowledge that Sanlam has, combining those two together and then delivering new markets into the product, what sort of new segments are of particular interest at the moment?
There are many areas. So one is to deepen what you're good at. So Sanlam, for example, has been very successful around large risks. So looking at big industries, large organizations, we do that very well. SME is something that we can do a lot better. We've got a small book, but that's something that we want to grow. It's a big opportunity. So how then we leverage what we have now and what we're able to bring from the Allianz learnings to be able to deepen that side of our insurance book. Then, of course, you've got the individuals. We've reached to them, both the agents, the brokers, and directly, but through very traditional sort of channels. So it's really one-on-one interactions. But then we are seeing solutions that will enable us reach people faster, give them information quicker, enable them to access our products faster, say through mobile solutions and other digital solutions that we may offer.
You say that you could do a better job with reaching out to SMEs, or rather encouraging the uptake of insurance among SMEs. What are the pain points, the friction points that SMEs have? Is it a cost problem? Is it the insurance products that they want? Or is it simply a case of product fit? They might want payment that they can stagger across the full 12 months of the year rather than having to make big lump sum payments in one go. What are the pain points?
Rama, we should hire you to help develop the products because you are spot on. I think it is a combination of all those things. If you look at, say, payments, we typically collect insurance in one bullet every year. And it's always a struggle because obviously the business's cash flows then are not designed that way. There's an education gap in terms of appreciating what we can do for them, what insurance means for them, what does it protect them against. There's a gap around that. Many times you see that insurance then in this case will be taken because probably the bank has insisted because you're getting a facility and therefore you end up covering just a small component of your business. And then in the event of a loss, then you find that there's big exposure. So education, the product designed to make it very simple for them to understand. So what you've done as a first step is to design a combined product that brings several risks together, and we'll be looking at how to improve this to even make it more palatable for the target market.
From an investor's point of view, because every time I'm running around the continent and we're speaking to people who bring capital in from outside, from the Gulf, from Asia, from Europe, the United States, and there's always this perception that we've been fighting for many years that, oh my God, Africa is risky. It's a really challenging place to do business. But then you have deals like this happening. Sanlam-Allianz combining the operations across multiple countries. That's quite a vote of confidence in the ability of firms and foreign capital to find a good return on the continent, isn't it?
No, absolutely. When you see that Allianz being the largest in the world and putting out capital, taking a big bet on the continent, that sends a very big vote of confidence to other investors. Because typically, then what you'll find, so many of the DFIs and people who are looking at investing in the continent, insurance is a key concern. And so they'll be wanting to come and work with people they trust. And you'll typically find many of them are possibly already working with Allianz in other parts of the world. This is big for us. I believe it sends a very strong message to people who are thinking about our continent. And hopefully it will then bring other investments from different sectors, so that we grow our economies on the continent, provide more employment, deal with risk better. But I totally agree with you, yes.
Speaking of risk, one of the big ones that I know we face on the continent in multiple markets that the firms operating in, including our own, tends to be risks around adverse weather, including agriculture, especially this market of ours. Kenya's had some of the worst droughts it's ever had in 40 years in 2022. And on one hand, there's an interesting paradox that always comes up because agriculture is the biggest employer in Kenya. It produces an enormous amount of value. But from an insurance standpoint, there really isn't much in the way of crop insurance that actually does happen in this market. From your perspective in the industry, why is that?
So the products do exist and a lot of models have been created to try and deepen this. So if we take Kenya specifically, and this will tend to be common, especially amongst East African countries, less in the South, is first the way agriculture is organized. So country, most of this farming is around smallholders. And the data collection, the record keeping of those, the way they do their farming, even reaching them is very complicated. In other parts of the continent, especially in the South, so Southern Africa, countries like Zambia, then the agriculture is organized differently so that even if it is multiple smallholders, but they're operating together, doing it on large tracts, and that becomes easy to reach, easy to ensure that they are doing the right practices, and therefore designing the insurance products becomes much easier. There's a lot of time and money being spent by different organizations in trying to figure out a product for smallholder farmers. But it remains a challenge, and it's a structural challenge that we're trying to figure out and then be able to feed them with the products.
Is that something that you'd be keen on experimenting in just to see if there's any potential for growth, especially in our region here in East Africa?
Yes, absolutely. And because now we've got insurance capacity from the Allianz Group, it's conversations that we've started, and we'll be trying to figure out what is doable. Yes, it is definitely something that we'll be looking at.
With the balance sheet backing that you now have from the Allianz side of the business, one of the things that I know you're keen on getting into is providing insurance for these large infrastructure projects as well. How exactly would that work? To what extent can you help actually de-risk all of these investments? Arguably are needed in roads, water, energy, and so on.
We do get involved in that, and we're participating in several of them, and many times together with other insurers because of the size of the risk, and obviously sometimes depending on the preferences of the contractors or the principals. That is available. So across the roads, dams, all these buildings that are going on, that insurance is easily provided. And typically most of them will have insurance that's ongoing. And we do see claims also coming through. And we've dealt with quite a few large claims in the last few years around this. So that is available. For us is then just going out, showing them what capacity we have. We've got A-rated reinsurance behind us now. And really it's to give the contractors, the principals, the confidence that when they take insurance with us and that they face any issues, then we'll come through for them.
Can we provide an example of how insurance would work for some of these large infrastructure projects? Hypothetically, for example, if I want to insure a power plant, what is the risk that essentially you would be underwriting as the firm?
It will typically be in two components. So one, it could be that when it's under construction, then you'll be providing insurance in the event that there are losses during the construction period. It could be breakages, it could be flooding. Several things can go wrong as you're doing the construction. Then you've got the operational side of it, which is when the plant is up and running. Again, you could get fires, machinery could break down, which could then cause loss of profit for the operating entity. You'll have people working in there. You need to provide them with insurance in the event that they get injured during the operations. You could get floods, earthquakes, for example, very rare in our side, but it's a possibility. That's how it would work. If it's a road, then you'd be looking at it from the time you start the construction. Again, you could be doing your work and a flood comes and you've seen it and wipes out kilometers of work already done and the contractor has to redo that. That's, for example, how it would come through. You'll have dozens of workers on site. They get injured during the operation, again, providing insurance for them.
And given the fact that we're seeing a lot more frequent incidents of either heavy rains, flash floods, more frequent droughts, and so on and so forth, is managing that weather-related risk a much bigger problem for you in managing your general insurance portfolio?
Yes, and not for us. That's global. What we see is that, and you just described the drought we had, for example, the cycles are shorter, are happening more often, and some of these events are becoming more severe. So it means that the guys who then do the modeling, because we've got actuaries and a whole lot of technical people at the back of all this who design these products, then have to rethink how you model these risks out. So if it's flooding, then it's happening a lot more and it's more severe, probably less on our side, but hurricanes and typhoons happening more often. So it's a challenge, and therefore the guys who are working on this then have to think through these events a lot more. I think the beauty now, as opposed to the past, and why some of these organizations like Allianz become useful, is that some of the technology that's used for designing and modeling these things out, again, is very well developed. So that should become very useful for us, even as we operate then on this continent.
I want to get back to households and businesses who are represented in the space now who may perhaps have a policy with Sanlam-Allianz. For them, now that there's been this combination of businesses, what changes for them? What changes in their consumer experience? What changes with respect to their policy?
The insurance that they've got with us should not change at all. What they paid for remains the same. The coverage that they purchased should remain the same. The big push for us is then to ensure that they feel a difference in the way they engage with us. So we are working very hard in the last few weeks since we got going to tighten how we engage with our customers. Initial stages, making sure we are more responsive and making sure we are turning around things faster. And then to keep improving as we get a hold of other assets and ideas that then will pick out of this whole JV arrangement. But in terms of your insurances, in terms of running claims, nothing absolutely should change.
With respect to governance structures, so now that these two entities have been combined, how does that change? What sort of oversight exists within the JV?
Typically, we've got an overall board that is responsible for the entire continent. And that's now for our side, we've got a team specifically set up for the general insurance business that's then responsible for the businesses around the continent. That's then broken down into a region, and we are part of a region, again, that has oversight. Then in country, we will have an operating board. That's then the overall governance structure, supporting now the people from the region. We try not to have too many layers so that then tightly governed, but at the same time, then we have the flexibility to operate. That's really the thinking.
Walk us through conversations that you had with the regulators in the run-up to the rebrand. I know our regulators, in some cases, they can be a bit strict with how these combinations happen. So what are those conversations like in the run-up to getting this deal and the JV approved?
Thankfully, our regulators have been extremely helpful. The Insurance Regulatory Authority is our key regulator. They really helped us walk through this journey. It's taken 2 years to get here, but they were very helpful. The key concerns, one is obviously the capitalization of the businesses, that you're adequately capitalized and that they watch all the time. But the second big concern was then the customer and ensuring that then we don't drop the ball, or there's no prejudice to any of the customers because of the new setup, the people that run the business. But they've been very helpful to us. But yes, we did have tough discussions. They looked at the agreements very closely, but they did give us the approval that you required, and for that we're thankful.
With respect to capital, that's been an ongoing conversation within the industry as a whole, because going back to the protection gap that we spoke about, the number of risks that we have to cover, those are not going down, they're going up. Some of them, of course, are related to the adverse weather that we've also spoken about at the moment. Are you in a position now where you say, look, we are comfortable with the capital levels that we have, we will not need to raise any more?
The key thing we face now is that we operate in a risk-based regime for capital. So that could change depending on how much risk you're taking on, and then the experience that you have on the insurance book that you're underwriting. So this calls for a lot more care in the way you're underwriting, how you run your business, so collecting your debts and all that has impact for us. So to that extent, it's always dicing to some extent. The big comfort we have is then that we are behind us are two very strong brands, so that at any instance, we always have the guarantee that they're going to back us. So even if we fell short because of any of those challenges, we have total comfort that they'll be behind us. And then, of course, we've got reinsurance behind us, is a reinsurance, and that also enables us to extend our capital, so to say, so that as we write risks, which we then don't have 100% appetite for on balance sheets, then we share that risk with the reinsurers. So to that extent, we are very comfortable in terms of protection from a capital perspective.
I just want to go to the listing side of things. Sanlam Kenya, of course, is trading on the NSE. Is that going to change, or will it remain pretty much as it is now, regardless of the fact that the JV exists?
That remains unchanged. So that business was also rebranded to Sanlam-Allianz Holdings. So that changes, remains listed on the NSE. That does not change.
With respect to insurance penetration, and this, granted, is not just a Kenya thing. We see it in other markets as well. You go to Nigeria, it's the exact same problem. Insurance penetration remains relatively low. Given the other markets that Sanlam-Allianz operates in, are there specific things in the Kenyan market that explain why that insurance penetration is low? Is it just a general distrust of the insurance industry? Is it past, perhaps, negative experiences people may have had with insurance? Or are there other macro factors that explain that, like the fact that, for example, our purchasing power for most households and businesses who are listening to us now has been declining for the last decade?
Yes. And it's probably three broad things. One is that ability to purchase insurance, the challenge. We know the state of the economy, we know the employment issues, and also partially also the youth population. So the inability to purchase then becomes one key challenge. Just keeps the penetration down in our country and across many markets. There's obviously the offerings issue where there's a trust gap that again we need to fill, plus education so that then people trust insurance a lot more, but also making sure that the products you're designing are speaking specifically to the risks that people perceive, that they're affordable, they are easy to buy. We are a vast country. How do we reach everybody? I think physical is one, but as we go along, it's more complicated to reach everybody. There's a lot more interaction digitally these days. So that's part of the issues that you have to fill. But I think we also have the big social component of insurance, which works very well in Kenya and not in many other countries. So Rama, if you think about funeral insurance, I think part of the reason it has taken time to grow and we have to rethink how we position it is because if then an event happens, you set up a WhatsApp group and you'll be raising more cash than you even needed. So the social component of it is really insurance. If you think about it, it's not formal, but it works very well in each instance. So again, we've got that piece of it, which does not exist in some of the other markets, that then we have to think through and then how do we work around that to make people understand and appreciate that actually insurance could replace some of the ways that we approach risk.
Just want to pick up on the example that you gave there around community insurance when, for example, a funeral happens. To what extent would it be easier for us to expand access to those products by embedding them in some of the everyday things that we do? So some of us, for example, we barely think about, for example, the monthly fees that we pay on our bank accounts or on our SACCO accounts. And I know there's been an effort to try and embed insurance products as part of our daily financial services that we access every other day. Do we need to do more work on that front in order to expand the reach of these insurance products?
Yes, there are opportunities across different touch points of embedding insurance. We've done it around the car insurance, for example, embedding other products on it. We worked with some of the banks and they make offerings to their customers by their monthly fees, as you've said. There are a lot of opportunities that we need to really work through, figure out how to unbundle the product and make them more affordable, with the idea that then scale will cover whatever price differential or the price coming down, then be able to reach many more people. But there's plenty of work and thinking that you have to do if you're going to expand the uptake.
With respect to tech, because this is a country that's got the better part of, I believe, 40 million mobile money accounts, we do a lot of things, we do a lot of transactions on our phones, and it's become fairly easy to invest, for example, to buy into money market funds on our phones with a couple of clicks. Shouldn't insurance be exactly the same way?
Absolutely. And we've started work to especially make it easy, one, to enjoy the service so that we offer. So part of what we're working on now is then to make sure, for example, you've got a claim, then you're able to reach us, we're able to process your claim, you're able to follow what's going on by enabling you to see the process as it's going along. Say it's a car being repaired, then you're able to put up the update and you don't have to keep visiting the garage to follow what's going on. So that's something we hope to make sure that it's up and running in the new year and make it easy to offer the service so that then we can focus on the sales side. Because if you don't sort the service side and the mistrust and make it palatable and easy to work with us, then selling will always be complicated. We've worked with a telco, pushing device insurance, bundling that with insurance. I think the first experiment, we've got a lot of learnings. We are reworking that and we'd like to go back and now push that even more. I think we hit 600,000 users of that product on that run. So it tells you that the appetite is there. So yes, next year we'll be pushing a lot more harder to increase that.
Some of the interesting findings from that experiment, you've got 600,000 people using the product. That's certainly not a small amount. That's not a small market, so to speak. What came out of that surprised you that was interesting?
Well, one was the speed of uptake, obviously, but it helps that then it's bundled. So the bundling with a telco, for example, bundling the bank, you can see the opportunity to scale up is very quick. But obviously the reverse for us then is the ability then to absorb that on almost a legacy setup. So part of what we are doing now is to redo, for example, how we would run such products on our systems, the tech that we have behind it, so that then it's smooth, so that when the claims come through, then you're able to process them quickly, efficiently, but also cost effectively for us so that then the product does not become unprofitable. So for us, the more learnings is really how to deliver the service. And those learnings now we are working on them to tighten the service side of such offering, because now the thesis is out there. We've proven that it's possible actually to scale up with the right partner.
To the question around scaling up, because I know some of the challenges and arguments I guess you're going to have at C-level, there's always going to be, do we go our own way? Do we provide a standalone app and a standalone website that basically does all this work? Or do we take the option of embedding into a service provided by a telco or using a telco's platform with the associated costs that come along with being embedded into tons of reach? But obviously it might eat into your margins. How do you guys handle that discussion?
It's a live discussion. It's becoming clearer that if you're going to scale, especially on the sort of low value products, then partnership is the way to go. And for us, we are very clear about that. It's identifying the right partners who we've got the same DNA and we're able to co-create products that then we push them through existing bases. The biggest cost when you're distributing these products is primarily that reaching out, being able to get to the customer. That's the most expensive piece. So in any case, it's a cost that we'll be incurring. So from a margin perspective, it's not necessarily going to wipe it out. More importantly, then you're able to build scale and then the net effect is, and then the revenue will be higher than it is right now around the smaller piece that you're able to reach. So partnership for us is the way to go to if you're going to go to scale.
I know that customers who are listening to this will probably be like, now it's new brands, new names, and the experience for them might be one of trepidation. What would you tell them if they're nervous about these big name changes in the sector?
It's name change, but the promise is the same, that we ensure that we're offering value to you. We are working very hard to make sure that, one, we can differentiate our offering, that when you purchase a product, you do it with ease. When you've got an issue, you're able to reach us, we're able to get back to you quickly. It's a challenge at the service side. It's always been a headache, not just for us, but for many insurers. So that's one part of our offering that I'm paying a lot of attention to, and we are trying to figure out how to get it done properly. But the promise remains the same. The name change for me should give you a lot more confidence. It's two big brands, big reputations, big responsibility that we are carrying now. We will not want to mess around with those. So all effort will be put in to ensure that we'll be able to give you good service.
I know you guys work with this Live with Confidence product tagline. What would that then translate to for the clients who are listening to this space?
What we want the clients to do is to focus on what they're good at. We know that they face various risks. That what you're good at, we'll take care of that, so that then you can get on with your life. You can run your business confidently, knowing that then whatever part of risk is covered by insurance through us, we take care of that competently.
And that usually is the important part, right? Making sure that it's as smooth as possible from start to finish. So it translates into a win-win relationship. People are properly covered, business is covered, but it also allows you as an enterprise to remain as a going concern.
That's correct, Rama.
But we're getting into the tail end of the conversation now, George. If we're having this conversation a year from now, what should we expect the combined business to look like? What are the new areas of growth that you'd like to really focus on and to put 100% a really sharp laser focus on in 2026?
So Rama, sharp focus is going to be on our customers, ensuring that what we're offering to them is of high quality to their expectation. So 1 year from now, I'd be very disappointed if the customer does not feel that there's a difference when they engage with us. So that's the one area that we'll be spending a lot of time and effort and resources on to build. So training our teams, making sure that they have the capacity to offer it, looking at our tools, seeing what we're able to fix, what we're able to work around, to make sure that also our staff members are able to deliver the service with ease, and so that even for them, they should be enjoying what they're doing. But we've got growth segments that we're thinking about. So we'll be watching how well we're doing on the SME side, both in terms of product development. We'd like to develop some focus groups to help us think through what we're offering. The risk we always face is that we develop products for ourselves. We want to go out and co-develop these products, working with the final users. So we'll be watching the growth on SME side. And then, of course, the other traditional sides, whether it's motor insurance, the large corporates, again, just making sure that, again, we're keeping an eye on that and we're growing that side of the business.
If hypothetically someone wanted to take part in some of the experiments, product development runs that you'll have in 2026, or they have an idea on what they would like to see as an insurable product or service, how do they get in touch with your team?
That's a good idea. And I was just thinking through, how do we get people to give us feedback? So we've got the socials. If you DM'd us on LinkedIn, on X, we would love to actually figure out how to work with people, because at the end of the day, you're the one who's on the ground. You're the ones who see things that we don't see. So I think direct messaging us as a first instance is my instinctive answer. But I think I'll also sit back with our communications team and figure out what other ways do we use to get more feedback. Obviously, there are some easy places that we'll go to. So, for example, talking to the banks, because they're in touch with their customers. They see a lot of what we are looking at. There are existing organizations or consumer groups that our target customers within their sort of databases. We'll also reach out to them. But I like the idea of also how do we then directly reach out to people who have ideas. And as a start, let's use the socials.
I'm going to bring this conversation to a close quite shortly. Just a brief market update for the individuals in the space at the moment. Kenya's shares are actually around 40% today. But if you actually look at the delta over the course of the year, it's actually quite significant. It's about a part of 200%. So from the perspective of the market, investors are actually voting with their wallets, so to speak. They clearly are comfortable with the changes that have happened here. George, you get the last word to close out the conversation. What would you like to tell our listeners?
Well, thank you. Thank you very much for giving us first this opportunity to come and have these conversations. I think it's useful. One of the things we really want to do is to spend a lot more talking to the people out there, both our customers and potential customers. That feedback becomes very useful, because one of the things we don't want to do is to build a business products for ourselves. We need to do the products for the potential customers. We want people to live with confidence, and that's going to enable you access better products, bringing our combined global expertise to the fore, so that we use our local insights to then create great value, so that you have a greater sense of financial security as you do your things. And hopefully that then moves our numbers up, which is really why we exist. That will be my closing, Rama. Thank you.
We'll be speaking to George Courier, the CEO of Sanlam-Allianz General Insurance Kenya. Once again, thank you for joining us on this particular space. Asanteni sana.